Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So we have been talking about and really kind of addressing the overall sell-off happening around this space. Now, we do know about the tariff discussions, and let's just be honest here. You guys don't want to hear me talk about tariffs for the, fifth day in a row. But one thing that I will say is it does feel as if the market is getting extremely bearish, okay? And this is where I actually look back at previous times in the space where the bearish sentiment was getting so loud, so overwhelming, just for us to go absolutely parabolic in terms of price action. Now, could we say for certain that this is the exact same, sort of situation of like going back to FTX imploding or COVID? Not exactly, right? We know that it's not the same environment because Bitcoin is at $83,000. This is what the all-time chart looks like. XRP is still over $2. This is what the all-time chart looks like. So we're not in the same exact situation, but everything outside of crypto is still looking pretty rough, and it's getting over exaggerated by, accounts like the Coinbase letter, which I have been putting a spotlight on. And listen, I still think that we should pay attention to what some of these big accounts are saying, even though they are extremely bearish, because the facts are still facts. And we know that the market, specifically the traditional markets, have been pretty rough. For an example, here we have from the Coinbase letter saying, breaking the Russell 2000 index officially enters bear market territory for the first time since 2022. Small caps are getting crushed in this trade war. And yeah, they are. And I think that if we really look at what's going on, I mean, $3.1 trillion erased from the stock market in a single day is absolutely wild, okay? But the number one thing that I want everyone to realize is this is getting blown out of proportion in a huge way, because when you actually look at some of these charts and you zoom out, you can clearly see that there's nothing to be concerned about at this current moment in time. Like, even for an example, if we actually look at crypto, which, yes, crypto is still being focused on. For an example, here we have another post very similar to this one where we have over $1.65 trillion wiped out of the US stock market at open. And there was similar charts like this even around crypto. Like, if we actually look at the media on this account, we can look through the post. They've been extremely bearish for for a very long time, obviously. But the problem is that this has been volatility as well. Like, these accounts are posting, on green days, 1 trillion added back to the stock market. And then the next day it's, 1 trillion wiped from the stock market. It's just been a yo-yo trading environment for stocks and for crypto. But the number one thing that I want to stress is that when you zoom out and you look at the all-time charts on some of these, asset classes in these markets, like for an example, the crypto market, we zoom out and it just feels very similar back to that time frame from like March into the summertime. Now, we have been selling off since roughly December, okay? December 15th to be specific. So if we're thinking about that, we're coming up on 4 months that we've been selling off, okay? Back here, it was March all the way into September. So roughly almost 6 months of just downward sell pressure. If this is the case, is it safe to assume that we would start to rebound during the summer, just to top out during the fall timeframe? I wouldn't be opposed to that. And in fact, it's something that could happen. We could chop until, roughly like June or so. And I would be totally fine with that. But the big thing that I really want to focus on here, okay, is how bearish everyone is at a time where the dollar looks like this. The dollar has been falling off a cliff since it almost retested the 1618 fib level. And in fact, if we actually look at this, since going back to January, the dollar's actually down over 8%. Now, if we go to where we are currently closed out on, it's about 7.5%. But this is extremely significant for a reserve currency, the US dollar as a whole. And now we're almost close to losing the first key crucial support level that we were trading on during 2023 into 2024 and even now into 2025, because it is still acting as support. If we lose this, the next big focus here isn't exactly the level back here in September. No, I'm actually looking at the July 2023 macro support levels to be lost, because I still have a zone in which I'm looking at the dollar actually bottoming out this cycle around 90, almost 6 to about 98. This would be retesting the support zones of March of 2020. There's a lot of demand down here as well on the macro. I wouldn't be opposed to us actually retesting that. And I said yesterday on X, and this is why we have to focus on things outside of all the, mainstream focus of, oh, look at how bearish the markets are, everything's selling off, panic, panic. I said to focus on the dollar on X because what's the correlation between a weak dollar and risk on assets again, I said. And when we think about that, a weak dollar means very strong risk on assets. It means you should be focused on risk on assets at a time where the environment for risk on assets is actually very easy to focus on because it is extremely bearish. We are seeing massive opportunities across the board as well. I mean, think about it like this. Outside of XRP, I get XRP is not in a very good standing because, again, we were buying this thing around like 50 cents, 30 cents. It's now over $2. So is XRP really giving us a great opportunity here? Not exactly, because why would I be buying at $2 when I had the opportunity here? Now, for new participants, yes, is XRP giving us a good opportunity? Technically speaking, yeah, it's trading around $2 as major support. So far, it has been holding this as well. And it's down significantly from the highs previously around $3.40. But the main thing that I'm actually looking at in terms of like the altcoin market is how deep the sell-off over the last 3 months are on some of these altcoins. Like, for example, if we zoom out and we really kind of look at some of these projects that we know are pretty solid, like, I could pick Injective for an example. Injective is a solid gem in this space. I've talked about it on multiple occasions. If we look at the all-time chart for this thing, Injective is now at prices that we haven't seen since going all the way back here to like 2023, November, October of 2023. These are significant opportunities after the market has been hit by a tariff storm. But again, nobody's focused on this because what are they actually looking at? Well, they're looking at uncertainty and they're looking at recession, signals. Like, for an example, over here from Zero Hedge. By the way, huge account. I mean, if we look at these accounts, 2 million followers, even Kabaisi Letter, right? Like the Kabaisi Letter has over 820,000 plus followers. This post here, in terms of a bearish post talking about how the Russell 2000 hit a bear market territory, 585,000 views, 9.5K likes. I mean, guys, the engagement and the views on these posts are very significant. Even if we look at Unusual Whales, you could see the engagement across the board here. Like 900,000 views on Watcher Guru. This is an account that has over 2.9 million followers. So if we think about this, right? We're still looking at the uncertainty around these markets. These are Goldman Sachs traders, okay? These are the main top players that you want to do the opposite of what they're telling you. Like, for an example, even over here, Justin, global recession odds rise to 60% according to JP Morgan. Oh, well, if JP Morgan's saying it, I gotta believe them, right? 60% odds of a recession happening within the next 12 months is just insane to me. But this is showing us that the tariffs are actually scaring the markets. Retail is scared. Markets are terrified. And guess what? What better environment to be a bull than now? You do not want to be a bull when everyone is screaming that, oh, look at, we're about to go absolutely parabolic. We're going to go to the moon. We're going to go buy Lambos. We're going to do this, do that. No, you want to get out of the market at that time and you want to be a bear. Right now, the entire sentiment around these markets, traditional markets, crypto markets, is that everything's going to crash, the floor is going to fall out from under us, and everything's going to just go to zero. Even if we look at other banks, Deutsche Bank, 50% in terms of an odd and probability of a recession in the US. 50% from Deutsche Bank. So now we have Goldman Sachs talking about how uncertainty is going to remain sticky. JP Morgan 60% of a recession. Deutsche Bank 50% of a recession. And here are some of the other odds. So Kalshi is a 53%, which, by the way, this is a retail focused one in terms of odds. So retail is betting 55% on a US recession happening this year. So you can clearly see that, the retail sector is gearing up for a recession. They're scared to buy. They're sidelined right now. At the same exact time that Larry Summers, 50%, JP Morgan, 40%, CNBC Fed Survey, 36%, Moody's Analytics, 35%, PIMCO, 35%, and Goldman Sachs at 35%. The U.S. economy faces heightened uncertainty in 2025, with recession odds surging after Trump's Liberation Day tariff announcement on April 2nd. Kalshi markets now price at 53% chance, up 8.1 points, driven by a 10% universal tariff, higher levels or levies on key trading partners, e.g. 34% on China, 20% on the EU, declining consumer confidence and global trade tensions. JP Morgan warns of a $660 billion annual tax increase on Americans, potentially fueling 2% higher inflation. So when we think about this, right, the entire environment is extremely bearish, right? Everyone's idea here is that the markets are done, and even retail, by the way, has completely flipped. We have here from the Kobayashi letter, retail investors are becoming even more bearish, but why would they become bearish? It's not like, the Kobayashi letter is constantly posting bearish news feeds, right? They are. The share of individual investors expressing bearish sentiment over the next 6 months in the AAII survey hit 61.9%, the most since March of 2009. This is also the third highest reading since the survey began in 1987. By comparison, the 2022 bear market peak was 60.8%. This bearish sentiment has been above 55% for 6 consecutive weeks, the longest stretch since the 1990s. This has surpassed the previous 5-week streaks during the 2008 financial crisis and the 2022 bear market. Market sentiment has rarely been this pessimistic. So think about this. We have fear and bearishness now at peak historical levels. Listen, I am either wrong here, and I will eat my words, and I will also take the hit because I am still heavily invested in crypto, or I am right, and I will experience the best part of this market, which is when we completely take the market by storm, leave massive amounts of money sidelined, and we see historical gains unlike ever before. Because this is the most bearish these markets have been in a very long time. Retail sentiment is absolutely gone. It's fried. And think about the environment right now. So as everyone is getting bearish, the big dogs, JP Morgan, Goldman Sachs, like Deutsche Bank, all of these big Wall Street giants, banking giants, they're telling us what they want to tell us, which is you should be scared. You should be fearful. Sell your positions. Get out. Because guess what? The markets are going to pump again. People are going to FOMO in just for them to get wiped out again. Wall Street and the big banks manipulate retail so easily. They are playing the easiest game ever. This is why when we are being told things like CNBC telling us, oh, hey, you should avoid this, you should avoid that. Typically, that means that we shouldn't, right? We should be going all in. We should be jumping in. It's very similar back to like December of 2020, right? With the XRP lawsuit. During that time, fear levels were peaking. They were going insane. And CNBC and the mainstream media was saying, oh, XRP crashes, this, that, whatever. Massive fear headlines just for XRP to bottom out at the end of December. And now we're at over $2. We hit over $3 already. Like, think about how crazy the manipulation is from mainstream media, from the big banks, from Wall Street. This is why I personally think that this environment around crypto is more bullish than we were actually looking at. In fact, you won't really find that much bullish post around crypto right now. But when we think about it, the dollar's extremely weak. The markets are extremely fearful. We're, right now, currently, in terms of like crypto, most of the crypto market is just, laying on, macro support, waiting for a big bounce. I personally see these markets rebounding in a huge way, taking these markets by storm, completely shocking retail in a huge way because of how bearish retail is. And I'm telling you guys right now, I really see this as one big overall shakeout. It's a big manipulation, time around crypto and even around traditional stocks. And think about it like this. It's not even just price action that's shaking people out. It's also the time, because for over 3 months now, we have been selling off. So it's time capitulation mixed with price action capitulation as well. Do not get shaken out. Do not be extremely fearful while everyone else is. You want to be a leader here. Do not just follow the pack. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.